Hi everyone, welcome back to Corporate Decoder. Ever wonder what happens when a clothing store tries to hide some not so stylish financial results under a pile of trendy marketing? Well, today we're diving into American Eagle Outfitters' latest report to see if we can spot the difference between what they're selling and what's actually going on. American Eagle Outfitters released their financial results for the fourth quarter, which ended in February. We're going to dig into that press release to see what's really happening with the company. Now, they do mention something important here. They're saying that this report has forward-looking statements, which basically means they're guessing about the future, and they want you to know that those guesses might not be right. They point you to their annual report and other filings if you want to know all the things that could make their predictions wrong. It's like a disclaimer saying, hey, we're trying our best, but things could change. Okay, so here's something interesting. American Eagle's board of directors has given the thumbs up to buy back more of its own stock. They've added 50 million shares to their existing buyback program. Think of it like this. The company is saying its own stock is a good investment. As of March, they have the go-ahead to repurchase a total of almost 69 million shares through February 2029. They have some rules around this program. They can buy shares on the open market or in private deals. They might even use special trading plans to do it, but here's the catch. They can stop the buybacks at any time. It all depends on how the business is doing, what the economy looks like, what the stock market is doing, and what the legal rules are. So even though they have permission to buy back a lot of stock, it doesn't mean they will. It depends on how things go. Now let's get to the main event, the press release with all the numbers. Alright, diving into the numbers, their total net revenue, that's the money they made, increased to $1.7 billion. That sounds pretty good, right? A bigger number is usually a good thing. Looking at just the American Eagle brand, their net revenue went up 9%. So it looks like the core brand is doing pretty well. People are buying more American Eagle clothes. A 9% increase is a solid growth rate. Aerie, their other brand, did even better. Their net revenue jumped 15%. That's a really strong growth number. It looks like Aerie is a bright spot for the company. 15% suggests they are attracting a lot of new customers. Their gross profit, that's the money they have left after paying for the cost of goods, increased by 24% to $604 million on each sale. That 20 big jump, it means they're not only selling more, but they're also making more money on each sale. That 24% jump is more than their revenue increase, meaning they are managing their costs more effectively or charging more. Let's talk about inventory. They ended the quarter with $565 million worth of stuff in their warehouses and stores. That's down 12% compared to last year. Here's why that's important. If they have too much inventory, they might have to sell it at a discount, which hurts their profits. Reducing inventory by 12% is a good sign. It shows they are managing their stock better. They ended the quarter with $325 million in cash and investments. That's a pretty good cushion to have. Total shareholders' equity is $1.2 billion. This is how much the company is worth. They're planning to spend about $200 million on capital expenditures. This is money they're investing in the business, like opening new stores or upgrading their technology. This shows they are confident enough to invest in the future of the business. Now let's talk about the things that could go wrong. They're worried about supply chain problems, inflation, and what's happening in the world. These are all things that could make it harder for them to make money. For example, inflation could make their products more expensive, which could cause people to buy less. Okay, let's zoom out and see the big picture here. American Eagle seems to be doing pretty well right now. Their revenue is up, their profits are up, and they're managing their inventory. Aerie is a star performer. However, they are also worried about the economy and global events. Those things could throw a wrench in their plans. Looking at the numbers, I'd say American Eagle is in a reasonably good spot. They are growing and making more money, but they need to watch out for those economic headwinds. If the economy slows down or global tensions increase, it could hurt their business. Overall, I'd say American Eagle is worth keeping an eye on. They're not a screaming buy, but they're not a disaster either. It depends on how well they can navigate the challenges ahead. Thanks for watching. If you enjoyed this video, please like, comment, and subscribe for more corporate deep dives.